All right, Lagos, it is 16 minutes gone past 5, and you tuned into Personal Finance here on Smooth 98.1. Okie doke, it is a Wednesday, so every Wednesday we're talking about how you can improve your finances and make it make sense for you. But today on Personal Finance, we'll be taking a look um, at investing in consumer goods companies, especially those that are on the stock exchange market, because it is earnings season around the world. And for those who publicly traded their companies, well, in Africa, Europe, the Americas, Asia, and even the Middle East, they are releasing their half-year numbers for stakeholders and the wider public to have a review of. And yes, it's interesting stuff. Well, two companies whose half-year performance we will be taking a look at are International Breweries and Nestle Nigeria, and sharing insights this evening and giving us a breakdown of how things actually work in that space is Oyindamola Oyenuga. She's the consumer goods analyst at Meristem Securities. Good evening, Oyinda, and I hope
Hi, good
your
evening.
day has been good.
That's been fine, thank you. How's
Awesome.
yours been too?
My day has been good. Thank you so much for asking. I love the weather, so it just makes me all
Amazing.
excited.
Mhm.
Anyways, Lagos, as always, you can share your thoughts as well. You're not left in the background. You get to share your thoughts if you
Mhm.
also are trying to dabble in this as well, or you need to get more insights. What you can do is share your thoughts with me on WhatsApp. The number is 0911 0911 That is the number you want to save on WhatsApp to share your thoughts as we journey along on this conversation. So let's start with international breweries. So I know in half year of 2025, the firm actually reported revenue of 340 billion naira. Just hearing when I saw the amount, I was like, hey God, all I want is
That's
just
a
one.
lot. That's a
All
lot.
I want is one. One, and I think I'll be at least comfortable for a bit, then I can invest it. But let me not get ahead of myself. What are the
Mm.
revenue triggers that has made it get to this amount? Is 340 million naira, not a billion naira. Sorry, yeah, let me correct myself. Billion naira,
Billion,
not million.
yeah, billion.
All right. Yes, please share your thoughts.
Okay. So international breweries, I mean, they really staged an impressive comeback in this H1 2025, I would say. And the result was actually quite impressive compared to, I mean, their past periods of turmoil. I
Mm,
mean, even for many viewers and many manufacturers, particularly consumer goods players, the past few years has been heated for them. And
mm,
looking at international breweries, I mean, revenue performance was pretty good. A solid 53% year on year. That's looking at H1 this year compared to 2024 last year. And really, this performance was just really indicative of mild price increases. Also, we saw efforts by the company to refresh their brand image, across their different product segments, which helped to, boost their revenue. And of course, I mean, I won't leave out the fact that um, there were significant investments that went into, improving their distribution networks, route
mm.
to market initiatives. So all this, together saw, the revenue performance improve for H1 2025. Yeah.
All right, all right, all right. Good stuff. When a company decides to change the way their outlook to how they do business, it kind
Mhm.
of seems like it paid off for them.
Yeah, it
Um,
did.
I didn't see it happening. It's usually a struggle, but for me to see this amount, it just shows okay. So great stuff. And for those who invested, you're about to be enjoying some great rewards. Anyways,
Yeah.
let's let's go further because um I believe that cost of sales rose by
Yeah.
37% to the tune of 219 billion. What were the drivers though that made this stand out?
So, I mean, cost to sales, yes, increased 37%, and it was not as much as the improvement in revenue, which is that's a good pointer. That's good. I would say that for international breweries, the cost environment was good for them. Although I
Okay.
mean it's not entirely low right now. It's still on the high side, but I mean the company was able to implement some cost saving initiatives, some
Okay.
things to reduce their costs, yeah, their costs during the period. And this was really evident in their, the pace of increase in um the cost. We saw cost increase by just 37% compared to last year. I mean, H1 last year, where we saw a whopping 104%. So, I mean, it was indicative of the company setting putting in place some, strategic cost saving initiatives to try to drive down their costs. And as
Mhm.
such, their cost to sales, which is why I initially said that, the pace of increase was not as much as revenue, so it's quite good for them.
Mhm.
So we saw their cost to sales ratio actually decline from, 72% last year now to a 64%. So right now they're on the good side. I mean, I won't say cost is low, right? But I mean, it's still they're putting
Better
initiatives
than
out
where they
there
were
to try
before.
to, yeah, exactly, to try to reduce this cost eventually.
Hmm. Okay. I'm sure that any win is a win, so they will take that as opposed to having to lose. No, no company wants to ever be in the down spiral. So they're always
At
looking at,
all.
okay, so um, have we done something? Is it
Exactly.
good? Can we just keep
Exactly.
maintaining that pattern?
Exactly.
So yeah, it's good stuff. And I'm glad that that is what is happening right now.
Mm.
Um, Now let's also talk. You spoke about how the company bounced back. So I know that it bounced back from 104 billion naira in losses.
Yes.
Let's actually talk about that because for them to have bounced back from 104 billion naira in losses in half year, that's in 2024,
Yeah.
but it still declared profit that same year
Mm.
to the tune of 41 billion naira. How did they how did this happen? What area of the rebound? Because if
Mm.
you're losing 104 billion, and then
Yeah.
all of a sudden, halfway around that, towards the end of the year of 2024, they were able to bounce back. What
That
magic? What magic did
what,
they perform?
so international breweries, just like you said, it was a serious comeback, right, from last year,
Hmm.
looking at this year. For their numbers, I mean, I would say that if you're looking at the historical period and how international breweries has really performed over the years, they have
Hmm.
faced, significant mounting pressures. And really this was as a result of the significant debt burdens that they owed to their parent company Citibank, no, well, their parent
Hmm.
company, and to Citibank as well. And of course, the unfavorable foreign exchange environment for them, it led to them recording significant losses in those prior periods. And I mean, since they did their debt to equity refinancing deal, that was early last year.
Right.
That's between the company and AB InBev. Their debt burdens have actually moderated over the period up till that time, even up till now. And we
Mm.
saw the impact of this on their current results. As they recorded the FX losses declined significantly by about 96%, year
Right.
on year. That's looking at this year compared to that year. So it really helped to improve their performance now that they've paid off those loans in full. And
Mm.
right now with the stable FX environments, the moderate fluctuation that we're seeing in the country's FX environment, that also helped their performance. I mean, coming from having these significant debt burdens that are in foreign currency and then paying
Hmm.
them down, and also with the
Right.
fact that the FX environment was quite stable for them. That's all of that coupled together translated to the significant reduction that we saw in these FX losses, and obviously in turn their profit after tax, it was much better for them. So like I mentioned before, I think I already mentioned this, the stability in the FX environment also. So that was like a major push really for a better results this period compared to the prior period.
Mm. honestly, just knowing that they were able to get back on track after losing out so much is definitely something to look out and study how they were able to do that. I'm so impressed. But now let's take a look. Let's leave international breweries. Well, let's leave them, the international breweries, and look out. Well, I won't say leave them per se, but what's the outlook for them in the brewery sector in Nigeria? What's the outlook for how it's going to look like going forward?
So the brewery sector in Nigeria, I feel is actually quite promising, and I would say
Okay.
optimistic. We have the optimistic view, or I'm of the optimistic view that, you know, going forward or looking into the near term is going to be quite positive for the brewers. I would say that, there are significant opportunities that lie in wait for the brewery sector in Nigeria. I mean, many
Mm,
of these companies, they are still trying to leverage on digital platforms to expand, you know, their route to market initiatives to reach, I mean, getting products from them to the consumers. And also, definitely, we're seeing product innovations and efficiency in their product mix, which would help to improve their performance. Also, like I mentioned before, I mentioned opportunities. If you recall, last year, we saw that Guinness, they stopped the importation of some certain
yeah.
premium spirits into the country. So I feel like that opportunity really opens up it really opens up an opportunity for local manufacturers to produce some of these premium products, premium spirits that are no longer available. It gives them the opportunity to venture into those spaces as well. So for these players, I think it's quite positive. Also, I believe that will I say the stable macroeconomic environment, the fact that we're seeing, disinflation in disinflation, basically the slower pace of increase in prices, and even
Right.
also the stable FX environments. Many of them, I mean, they're quite exposed to the FX market, and we're seeing the stable FX environment coupled with their other strategies to try to, reduce their exposure. It really bolsters, or it gives a clearer and a greener picture or greener outlook for these players. And I feel like even looking at the players, a couple of them have, international backing, and I feel like there's that opportunity, for them to maybe expand to other African countries to increase their revenue base and all of that. So
Right.
all of this together just helps to paint the picture of a more stable outlook, a
Outlook for
more
them.
positive outlook for the brewers here in Nigeria. Yeah.
Mm. Okie doke. And there's so much more that we will be talking about more. So I will be, I'd love to get your thoughts in regarding for people who want to invest in the breweries or invest in stocks in the brewery
Mm.
sector. But we'll talk about that after this quick breather. Lagos, the move a muscle. You need to stay tuned here on Smooth 98.1. When we get back, we'll talk about the those who want to dive into the sector, those who want to invest in it, and also talk
Mm.
about Nestle and what it is Nestle Nigeria is up to. If they're also making as much gains as international breweries. But all that good stuff is what we'll talk about on the other side of the squeak breather. Don't don't move muscle. Just stay tuned to Smooth 98.1. Critical look at your lifestyle and the state of your. Okay, we'll be back in a few seconds.
Okay.
Many more on the edge. One thing is likely to happen. System shuts down. Helping you discover facts about your health and expanding your access to well-being through relevant information. Tune in to Smooth Health on the Drive and make that connection with your body. Very interesting information I came across that I thought I should share. The Smooth Health, every Thursday at 5:15 p.m. It's all about your finances made easy because financial education is about not working for money. Personal finance on Smooth 98.1. Okay, Lagos, 32 minutes gone past five. You tune into Personal Finance here in Smooth 98.1. And today we are talking, well, we're taking a look at investing in consumer good firms in Nigeria. We've touched a bit on international breweries. We'll be taking a look at Nestle in a bit. Have my guest sharing insights this evening on, at least giving her own perspective on how things can go is Oyindamola Oyenuga. She is the Consumer Goods Analyst at Meristem Securities. Thank you so much, Oyindamola, for being here and, giving us insights.
Thank you too for having me.
All right. So, before we, call it, well, at least just move away swiftly from international breweries, I want to get your thoughts on anyone who is thinking, oh, okay, so I'm hearing all the good stuff. I'm hearing all the good, I'm seeing the digits. I'm hearing all the monies that I could be cashing in
Yeah.
on. So anyone who's thinking of investing this in stocks in the brewery sector, what should they be looking out for? Is it a particular company? Is it a particular brand? Or what exactly should they be doing if they want to get into this sector?
Okay, so I think first off, I mean, anyone who wants to invest in breweries in Nigeria would have to consider a number of factors. I mean, I already mentioned earlier before we went on the break how that, the general outlook on the sector is, positive. I mentioned, some factors driving these opportunities that are available,
Right.
within that space for production of certain, type of, product lines and
Mhm.
the macroeconomic environment as well. I mean, speaking to inflation, the FX and all of that. But I mean, coming down to okay, you as an investor, you want to get into brewers. I mean, just like any other company, right? I think the
You do
the
your research.
the yeah, this thing actually holds true for I mean any company. But looking at the brewery sector, right? The first thing I think to consider I mean, look at any company. A company is in the business to make profits. That's for a
True,
profit-making
true.
company. And the brewers on the exchange, you have Nigerian breweries, Guinness, international breweries, all of them. I mean, they're there to make profits. So
Yeah.
eventually, you as an investor, you want to get value from these companies. So first off, I think one thing to look out for is what is how would you estimate demand for those companies' products? Do they have brand loyalty? Are we seeing more brand loyalty with Guinness or with Nigerian breweries, or I mean international breweries that we just spoke about? These are the things to watch out for. I mean, do consumers prefer some product over the others? Also,
Okay.
you should look out for the fundamentals of the company. I mean, that's speaking to their revenue. These things that I mentioned, obviously, the fact that do they have loyalty? It obviously affects their revenue. If
Mhm.
you look at it, have they recorded? Do they have significant track record for revenue growth? And also,
Right.
what's the future like for them? I mean, speaking to international people, what's the future like for them in terms of their revenue?
Mhm.
Is the company faced with significant cost pressures, or are they implementing, strategic initiatives to try to drive down their costs? I mean, for manufacturers in Nigeria, it has been a known fact for quite a while. Cost pressures has been significant for them. But you see companies taking up certain initiatives like Nigerian breweries, like I mentioned before, cost efficiency initiatives to try to reduce, this cost eventually. And for many of them, they have significant debt because the nature of their business is quite capital intensive. So,
Mhm.
do they have significant debts that could, erode their profitability eventually? Because you're looking at them. I mean, if they're taking up debts, they have to pay back those debts, and
Most
that's
definitely.
significant. Exactly, they have to pay back those debts. So, do they have, high or mounting interest expenses that they have to pay? Those things will eventually affect their bottom line, which would erode the value that you as an investor could get from these companies. And beyond
Okay.
that, I mean, looking at even the regulatory environment. Recently, I saw a news update that's speaking to an African country where they just increased their drinking age from 18 to 21.
21.
Yeah, that's for Kenya. So I mean, those kind of things could affect companies' revenue. Also, I think they brought out a law about that influencers cannot there's a limit to which they can I think use some of these products, or basically maybe bring out content or something,
yes.
influence, basically bring,
Mm.
for this product. So some of these like policies, some of these regulations could also affect, brewers. I mean, because looking at brewers, their products are non-discretionary. I mean, a person would, if it's not, I mean, taking beer and taking all of these spirits is not an essential, so to speak, for
Right.
some of these for individuals, right? For the general public, right? So some of these regulations could, affect, these brewers and their business, right?
Right,
And also
right.
you need to look at the macroeconomic environment, because a company is at the center of its macroeconomic environment. Whatever happens in the macroeconomic environment eventually affects, these
That
companies. And for
business.
brewers in Nigeria, that's it's like it's a parallel. Whatever happens in the FX markets, you see that translating to the results that you see in these companies, even for inflation as well, And like I mentioned before, I said that brewers, their products are, non-discretionary. So if you're seeing, inflation trending upwards, that's a squeeze to consumer pockets. We didn't want to go for, a product like beers and spirits as against essential products. So these are things to consider, because eventually these things trickle down to the company's revenue, how much they can make from revenue. It trickles down to their costs as well, and eventually, their bottom line. And you as an investor, I mean, you're there for value. You're there for, you eventually want to get dividends from this company. You want to get returns from, your investment as an investor in that company. So whatever happens to their books, obviously
you also have to
investment. So these are the things that you need to look out for before investing in brewers in Nigeria. Yeah.
I like how you just broke it down. So do your homework. Don't just assume. And even if you're going to be dabbling in it, know that there are risks involved. So if you're a high risk taker, then go ahead. If you are mid risk taker, well, even if you are the minimalist, what you want to do is always ask your advisor, your financial advisor, for the right move to make before dabbling into any market. Okay, we've spoken about a lot about the breweries. Now let's take a look at Nestle Nigeria. We'll touch on this when hopefully we'll be able to see how we can talk finish this up before time runs out.
Yeah.
I know that they've had a 43% increase in revenue to the tune. When I also saw this one, I'm like, okay. I know I've contributed to this one as well, to the tune of 581 billion naira within the half year of 2025. And that for me is massive. I know they have lots of products out there, but my word, how did they get to this point? Because at some point, people will say they're losing stuff. So how did they get here? That's a huge amount. 581 billion naira in just half year of 2025.
They're still going higher. They're still going higher than this. Yeah.
So how did they get here?
So, Nestle is a consumer goods player, and revenue really came in strong for them. And I would say that the company was able to benefit from their prior, strategic price increases. And, for a consumer goods company, these are products, especially, looking at Nestle, they have, their food and their beverage segments. The kind of products that they produce, these are things that households need. These are things that individuals need.
And they use it on regular.
Yeah, exactly. And over time, they've been significant hike in prices for some of their products. And so, the company has been able to benefit from these strategic price increases, especially because also, the cost is not staying the same. So in response to these cost increases, they are hiking prices of many of their products. And we saw this translate to, better performance in revenue for them. And, Nestle is also like, the kind of products that they produce are premium products, I would say. If you compare them to their counterparts or unlabeled goods out there, they are premium products. And it was good for them. This period, we saw revenue rise by, 43%. But looking at comparing to the prior period, which was I think about 55% revenue actually came in slower, but I mean the figure was higher, right? But I would say that there's a limit to which you can stretch, consumer wallets, especially because if you have an alternative, they would move to, a cheaper alternative. Eventually, what the local man is there for is just to satisfy his needs, right? So, and I mean,
Yes.
it's just satisfy his needs. And Nestle being a premium product, their products are quite pricey, really. Well, we attribute this, slight decline or slower pace of increase in the revenue to consumers moving to cheaper alternatives, considering the squeeze to their wallet over time because of inflation. So that's why we saw
Right.
that moderate growth in their revenue. But I mean, revenues came in stronger, slight and moderate increases in volumes, and benefiting from their prior price increases. This helps them, but it was quite moderate compared to the previous period, I would say.
Well, talking about that, let's quickly talk about how it was that they also had a drop, and that drop was a big one, a huge drop. The net finance cost um dropped to 43.1 billion naira. I don't know. Was this a good thing? Was that also something for one to worry about if they're also looking at consumer goods stocks to dabble in?
So, looking at Nestle, right? I mean, you mentioned the significant decline in their finance costs. That's a positive for them. If your costs are declining for a company, that's good. That's actually
Okay.
good. If cost is declining, that's good. So, if you go deeper into what makes up these companies finance cost eventually, we're seeing that obviously it's made up of they have FX losses or net, I mean, exchanging their foreign currency
Ah,
denominated balances, and even
okay.
interest expense on other, financial, liabilities that they take up. And
Mm,
for what we saw this period, this H1 2025 period, was,
mhm.
a moderation, a significant, decline in their FX losses. And this was what we've always, mentioned prior to now, 2024, 2023, it was quite heated for consumer goods players, especially because of
Okay.
the sharp movement in the naira, the devaluation of the naira. That's it dealt a serious blow to many of these companies, and Nestle wasn't left out, right? Even the brewers were not left out of that
Okay.
heat. But over time, and this 2025, that moderation in the moderation in the FX movements that really helped their performance, and we saw a significant decline from last year to
So
even
weird.
this year. So it's actually quite positive for them, and that's how we saw the
Okay.
improvements in their bottom line eventually, right? I mean, their operations have been good for a while,
Okay.
and what has been holding them back really was those FX losses. And now that we're seeing that moderation, it's starting to look brighter for them. It's already getting better for Nestle. So what contributed to that decline was this FX stability that we saw during the period.
Mm. Okay, so I'm going to ask you this one in a minute or less. I'd like you to
Okay.
help wrap up the conversation because yeah, we're out of time already. But
Okay.
so far, we know that we're seeing things improve in the consumer goods stock market. My question is, since they've been outperforming and improving over as we're going further into the year, are there any good investments that well, I say we because I'm looking at always looking for new things to invest my money in.
Yeah,
So is
yeah.
are there any good investments that one can put their hands into uh and the general outlook basically for consumer goods stocks?
Okay, so I'll start with the second question. The general outlook for consumer goods companies are actually it's positive.
Okay.
It's looking brighter. I mean, they're coming from deep waters. 2023, 2024, there was a serious blow
Right. Then
in their performance, and now things are starting to look better. And I would say that, our outlook for, these players is quite positive. First off, cost pressures are, expected to kind of be better in terms of
okay.
speaking specifically to FX losses. That was the elephant in the room for them, FX
Mm,
losses. And now that we're seeing some form of moderation, many of these companies will not, we don't see, you see these FX losses reducing, and moderating significantly compared to the prior years. That's why, their bottom line and their profits, their profit after tax, that's their profits for the year basically has been improving. That looking at H1 results as for different companies that have released, Nestle, UAC and Unilever, and the likes of them, we've seen improvements in their books. So the outlook for them is quite positive. And even inflation, speaking to inflation as well, cost pressures, might not be so significant, still increase, but might not be so significant. And speaking to the first question, right? I mean, I don't rule out the fact that revenue performance and their top line performance is still going to come in stronger because these companies are not holding back, they're not sleeping, they're taking initiatives to ramp up their volumes and benefit from even price increases as well, right? But looking at the companies, I mean, is there still value in the consumer goods sector? I mean, I would say that there's a lot of value still, right? This is the period they're coming out of the waters, so definitely we're seeing investors betting on them. And if you're looking at the performance on the NGX, that's the consumer goods index, compared to the broad market, I think that's done over 60% this year. I don't have the numbers correctly, but over 60% this year, which is quite good compared to prior periods. So if you're looking at the stock to buy, I mean, I would say
that's something worth considering.
Definitely worth considering. USCN, Unilever, Nestle as well, worth considering, worth buying into, and even amongst the bureaus as well. So
okay.
It's a good buy. I mean, but some of them, I mean, their prices have increased significantly, right? But there's still room for value, I would say, for a number of these companies. Yeah.
All right, Oyinda, thank you so much for all that insight. Trust me, you've just made some people smile because they know, okay, that's the next place I need to be investing my money.
Yes,
as much as I enjoy certain, as much as they enjoy, yeah, so it's something worth. But how can Lagos, for those who have further questions they might want answered, how can they reach out to you on your social media handle?
Okay, so you can reach out to me at Temiloluwa Oyenuga at meristemng.com, and you can also send me a message on LinkedIn, Oyindamola Oyenuga. So I would be very happy to, continue this conversation and answer your questions.
Okay. All right. Thank you so much for your time, and I'm sure that Lagos has also learned a thing or two, just as I have. But so much more lined up for you, Lagos. As always, here in Smooth 90.